Today, I want to talk about how the Fed is preparing for the squeeze by telling regulators to be ready to handle failed clearinghouses. In a time where UBS is collapsing, AMC is renegotiating their debt, and taxes are being increased. So stay tuned and let's make some money. Later in the video, I also want to go through the back-to-back 100% plus gainers we had on S&P 500 call options in the Millionaire Mindset Trading Group. But now I'll dive straight in with the key information. So, tons of shills are going to comment down below saying, "FUD, shill, that never happened." But regulators have been told to be ready to handle failed clearinghouses on April 25th, 2024. Clearinghouses are similar to market makers like Citadel and many other brokers that actually clear those trades. And the Fed is telling the regulators to be ready to handle those businesses collapsing. So it says regulators must equip themselves with tools such as bail-ins, bonds to deal quickly with a failed clearinghouse for stocks, bonds, or derivatives without having to call on taxpayers for cash. Basically, the regulators have been told no more taxpayer bailouts, only other bank and hedge fund and market maker bail-ins. So it says after the financial crisis, regulators mandated clearing for a wider range of derivatives, meaning they must pass through a clearer backed by a default fund to ensure completion of trades. As a result of such changes, some clearers have become vital to financial systems in more than one jurisdiction, meaning their failure could damage financial stability unless they can be stabilised or resolved, meaning closed down, in an orderly way. Basically saying when these market makers fail, you either need to stabilise them, aka ensure that JP Morgan buys them out, or close them down and liquidate them in an orderly way. Hopefully without causing too many fire sales across the entire market, leading to a stock market crash. And temporary public funding for liquidity, aka taxpayer bailouts, should be relied on only as a last resort. So basically the Fed is telling these regulators, be ready for a market collapse and be ready for market makers to fail. Now, as I said, this is happening at a time when the AMC lenders have pitched AMC a debt extension. So the AMC lenders have come to them and said, instead of you trying to renegotiate a debt extension with us, how about we just give you a debt extension? So the theatre chain has nearly $3 billion of debt coming due in 2026, and the lenders have said, guys, let's push that out even further, let's renegotiate, let's give you a better interest rate. AMC also disclosed in a regulatory filing on April 19th that it had entered into a new letter of credit after terminating a $225 million revolving credit facility that was set to expire on April 22nd. As well, the theatre chain also paid off all outstanding amounts under that previous facility. So this destroys that short thesis of AMC failing to repay its 2026 and going bankrupt, which now won't happen because that 2026 debt will be pushed significantly further out. That way, AMC has renegotiated that debt, they don't have this huge expenditure coming up, and they can focus on continuing to improve revenues and profits and EBITDA to build up the cash needed to pay it off whenever it falls due in the future. And as I touched on earlier, AMC Entertainment decided not to renew its $225 million credit line and paid off any remaining debt under it, and no longer has to follow certain rules related to that credit line. As it says, the decision not to renew the credit facility and pay off the remaining debt could be seen as a positive for AMC. Again, obviously just destroying that short thesis further, suggesting AMC does not desperately need additional spare cash under a revolving credit facility, because obviously AMC has significant cash on hand and the cash burn rate is slowing. As I said earlier, I also wanted to go through this back-to-back 400% plus gainer that Doc had trading S&P 500 call options. Now you may look at this chart and say, Tom, you've got loads of indicators here. You've got moving averages, you've got Bollinger Bands, you've got clouds, you've got support and resistance lines. How can I read all of these indicators and what do they mean? Well, that's exactly what I teach in the Millionaire Mindset Trading Group. I teach you how to use these indicators to trade options on stocks specifically like the S&P 500 or the SPY. You can see we jumped into the call options after it broke this key resistance level, waiting for the ride up and then selling near the high of day. Now that led Doc to a 400% gain and a $2,600 gain, and the day after, he also generated an additional $443 back-to-back days. So guys, if you want 400% plus gains, be sure to join the Millionaire Mindset Trading Group using the link in the description below. Now you can also see that President Biden has just pushed a 44.6% capital gains tax. This is the highest capital gains tax rate ever in the United States. And as Joel added, he says, does that mean the AMC squeeze is incoming? He said, I think all of this stuff is connected. Raise capital gains taxes just in time to take billions of dollars away from retail investors and apes due to the squeeze. All of these headlines just seem to be falling perfectly into place. Regulators have been told to be ready to handle failed clearing houses because AMC has just renegotiated their debt, and to prepare for the squeeze, Biden has pushed a 44.6% capital gains tax rate. Because Biden knows the majority of apes have been holding since 2021 and therefore will now fall into that capital gains tax bracket. What better way to transfer tons of money from the 0.01% to apes and retail investors and then back to the government? And again, this is also happening at a time when 5 waves of UBS layoffs are to start in June. I've touched on UBS and their collapse as a result of the toxic Credit Suisse debt and derivatives and liabilities a few times now on the channel. And this now seems to be coming to fruition as 5 waves of layoffs are about to start. UBS is about to lay off up to 35,000 jobs globally, or 50 to 60% of ex-Credit Suisse staff. This is in a desperate attempt to save up to $10 billion by cutting costs. As Boss Blunts points out, Credit Suisse had massive losses due to Archegos using swaps and derivatives to short companies like GameStop and AMC. Those toxic derivatives were passed from Archegos on to Credit Suisse and then through to UBS. So that's why UBS is desperately implementing these layoffs to cut costs and generate additional capital, and also as Switzerland is now forcing UBS to hold an additional $27 billion more in cash for capital requirements. Again, UBS need more cash on hand effectively to pay for these toxic liabilities and derivatives, aka to pay for a portion of the squeeze. So they need to hold at least $27 billion and they need to cut costs to save an additional $10 billion on top of that. And the UBS chairman has said on Wednesday that he was seriously concerned about current discussions that could force the bank to hold much more cash and other liquid assets. UBS was once famed a few years ago for having tons of cash on hand, increasing profits and increasing revenues, and now UBS seems to be desperate for cash and wants to avoid holding more capital if possible. The chairman said that additional capital is the wrong remedy. But he did subtly add, saying there can be no remedy or no regulatory solution for a broken business model, referring to Credit Suisse. So it seems even the UBS chairman knew that Credit Suisse was up to absolutely no good and has all of these toxic derivatives still on the book. And finally, Investor Turf has tweeted about Devin Nunes, the CEO of Trump Media, who's just penned a letter to Congress highlighting suspicions of naked shorting. He's specifically targeted Citadel and Virtue Financial in his allegations to Congress. Again, this is something many other small companies have done in the past, like MMTLP, but this time is slightly different because it's Donald Trump who's in charge of Trump Media. Yes, obviously Trump is an ex-president. Whether that name still has any weight in Congress, I don't know, but we'll have to wait and find out. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.